I'm going to teach you how to read a candlestick and understand the candle movements. Now, if you're a beginner trader, I'm sure that you just understand that red means down and green means up. But there is a lot more to that to understand how to actually trade. So I'm going to show you what each candle means. In this example, for me personally, I have my green candle's colors changed to white. So whenever you see a white candle, just imagine it's a green candle, meaning bullish. In this example here, the first right there, that line in the candle is going to be your open. Let's say, for example, you're on a 1 minute time frame and the previous candle just closed. This price, the opening price of that candle, if it turns out to be bullish, that's where the open is going to be. Next, you have your low. With the low, it creates a wick. That long, low, pointy thing on that point is called a wick. In this example, we have a low with this bullish candle. What a low, or in this example, we call this a wick, where that like long, pointy thing is. We call that wicks. And what wicks represent when they create the low or a high in a candle, it represents that the body or the price used to come down from the open. So from the opening price, the candle come down, but it reversed and pushed back up, leaving that snail trail. A tip for traders when you guys are understanding and looking at wicks, the larger the wicks away from the body means a more significant rejection of a certain level. So when you see this wick here, you're gonna understand that somewhere in price, the market came down but didn't like that and then pushed higher, therefore leaving that wick, and then therefore leaving a low, the lowest low on that candle. Next, you have the high. It's the same thing as a low but reverse. The candle was really bullish and was all the way up there at one point to the top, but then reverse, and so the body is right there, leaving that snail trail or the wick. Next, when the minute or the time frame that wherever you're on, that candle will close. It will close at the current price, and the next candle will start forming if it is bullish as well. Let's go into a bearish example. This, you have your opening price. For a bearish candle, your opening price will always be higher than the close. Then you have your high. Again, once from the open, the candle was once bullish, forming with higher prices, and then it rejected from that area and pushed lower. All that lower prices, the candle was so bearish, it went all the way there at one point, and then it started to reject a little bit higher, leaving that predominant low because it left the wick or that snail trail there. Understand the snail trail. Then whatever time frame you're on, the candle will close at the price, and the next candle would start the forward process.